Okay, class, good morning. So, I'm going to talk about the different accounting concepts and principles that you will need to observe also in our subject business finance. So, why is there an importance for us to review these principles? Kasi when we're dealing with business finance, it's always tied to fundamentals of accounting, business and management. It cannot be deviated from it, 'di ba? So when you're dealing with your balance sheets, when you're dealing with your journal entries, we have to make sure that they are all aligned with these accounting principles. Kasi as a future financial manager, you will have to stick with these following principles in order to make sure that your data will be accurate and at the same time something that can be relied on by your bosses or by your companies. So actually, there are a number of accounting concepts and principles based on which we prepare our accounts. So these generally accepted accounting principles lay down accepted assumptions and guidelines and are commonly referred to as accounting concepts. Now, who are the following users of these financial statements? Now, we have the investors, the lenders, the management, and the suppliers and trade creditors. Now, as we will see, investors need the information regarding the profitability, dividend yield, and price earnings ratio. So these are the information important to them whether they will invest in a company or not. Diba? They need to assess the quality and the price of shares of a company before putting money on these companies or businesses that they're dealing with. Second is lenders. So lenders need information about the profitability and solvency of the business in order to determine the risk and interest rate of loans. So for example, the is interested in the company's viability or resilience in terms of paying out its loans, di ba? Management, it needs information for planning, policy making, and evaluation. And lastly, suppliers and trade creditors, they need information about the liquidity of the business in order to access the ability to repay the amounts owed to them. So, the government, customers, employees, and public are also interested with financial statements of a company because number one, in terms of government, they need information regarding the economic plan that they're formulating, and at the same time this information will give them a backdrop on how much taxes they are going to impose on a particular industry, di ba? Next, uh, customers are interested in long-term stability of the business and continuance of the supply of particular products. Okay, so for example, they have seen that this company is something that they would really like to stick with for a long time, or they would like to be patrons of the said company. Customers are interested if the company will always will still survive kasi they want to know if they have to shift to other companies or they have to resort to searching for other companies who will provide them the kind of supply that they need in the future. Employees are interested in the stability of the business because it concerns their security of tenure and at the same time benefits and promotion opportunities. And lastly, um, the public is interested in the information about trends and recent development. Now, on the limitations of conventional financial statements, companies may use different methods of valuation, cost calculation, and recognizing profit. And the balance sheet does not reflect the true worth of the company. Because sometimes the companies themselves, what they only show is depending on their agenda. So, for example, they would not want to attract investors currently. So, ang gagawin nila, ipapakita nila completely iba yung financial statement dun sa mismong true worth nila because they're planning to do something, or if for example ang agenda nila is to attract investors, what they're going to do is to show the financial statement of a company as if it's really doing well. So financial statements can only show partial information about the financial position of an enterprise instead of the whole picture. So these are the following accounting concepts that you will have to deal with. And on. First is that accounting concepts, we have the business entity, money measurement or stable monetary unit, going concern, historical cost, prudence, conservatism, materiality, objectivity, consistency, accruals, realization, uniformity, disclosure, and relevance. So regarding business entity, the concept here in terms of business entity is that the company itself is or the business itself is different or separate from the entity of the owners. So the business and its owners are two separate existence entity. So any private and personal incomes and expenses of the owner should not be treated as the incomes and expenses of the business. So for example, may binenta kang computer for your personal use that cannot be reflected on your uh, balance sheet or your income statement, because that fact of personal dealings cannot be reflected from your company's financial statements, diba? Because it's very personal. So an example, another of this would be the following. Any payments for the owner's personal expenses with the business will be treated as drawings and reduce the owner's capital contribution in the business. Because any kind of personal expenses that you're dealing with is not an expense of the company itself, but your personal expense only. So dapat siyang ma-record. However, for example, let's say kunyari may mga sarili kang personal na transactions that cannot be reflected kasi nga the company or the business itself is different from your own entity or personal entity. Money measurement. So all transactions of the business are recorded in terms of money, and it provides a common unit of measurement. So no matter how much you're against of valuing things regarding money, kasi kunyari may sentimental value yung isang property. So you have to be objective and state how much it costs in terms of the market, di ba? Next, going concern. So the business will continue in operational existence for the foreseeable future. So financial statements should be prepared on an going concern basis unless management either intends to liquidate the enterprise or to cease trading or has no realistic alternative but to do so. So the approach of your financial statements must be as if the company or the business will perpetually exist. 'Di ba? Hindi siya yung para pagmumukhain mo na the company itself will shut down after 30 days or after 1 month. The financial statement must reflect that the business or the company will a long period of time. So, regarding, for example, the fixed assets must be recorded at historical costs. Possible losses from the closure of business will not be anticipated in the accounts. 'Di ba? So, yung unless kung talagang actually magsasara yung business, kailangan mo siyang i-reflect. Other than that, kung wala pa namang talagang total na concern na magsasara yung business, the financial statement should be reported as if it's going to perpetually exist, 'di ba? Now, regarding historical costs, assets should be shown on the balance sheet at the cost of the purchase instead of the current value. So kung for example, let's say binili mo tong laptop na to at 20,000 nung 2020, that is how you would report it even though the financial statement that you're preparing right now is 2021. Bakit? Kasi yung value niya at the time of the purchase must be the controlling one and not the let's say yung current value niya, 'di ba? As you all know, lahat po ng personal property such as our laptops or cell phones are prone to depreciation. Next, prudence or conservatism. Revenues and profits are not anticipated. Only realized profits with reasonable certainty are recognized in the profit and loss account. Okay, so however, provision is made for all known expenses and losses, whether the amount is not for certain or just an estimation. This treatment minimizes the reported profits and the valuation of the assets. So as much as possible, yung ipapakita mong gains mo, yung talagang mayroon ng reasonable certainty. Ibig sabihin, kung ina-anticipate mo pa na after 3 months kikita ka ng ganito without any kind of basis, hindi pa yun dapat pwedeng i-reflect. So stock valuation sticks to the rule of the lower of cost and net realizable value. Bakit? In order to inform the customers that the conservative way is much more preferred than the one with the grandiose way, di ba? Kasi it may mislead the investors when it comes to dealing with your businesses. Baka pwede ka pang makasuhan. Materiality. So immaterial amounts may be aggregated with the amounts of a similar nature or function and need not be presented separately. So kung meron naman mga kunyari, isa kang $1 billion na company or business, may mga costs doon na parang sobrang liit na hindi mo na kailangan pang resibuhan and para i-account most of the time. Ano? So for example, gumastos ka lang naman ng office supplies sa ballpen worth 1,000 pesos. That 1,000 pesos is somehow not going to be material unless kung talagang halos lahat ng departments mo may 1,000 pesos na na-incur regarding sa ballpen, that should be reported in your financial statement. Pero kung mga maliliit lang naman like 100 pesos, billion dollar ano ka naman, billion dollar business, hindi na siya most of the time kailangan maging concern to record it in the financial statement. Objectivity. So the accounting information should be free from bias and capable of independent verification. And the information should be based upon verifiable evidence such as invoices or contracts. So the recognition of revenue should be based on verifiable evidence such as the delivery of goods or the issue of invoices. So yun yung sa objectivity, ano, uh, it should be free from bias. Kumbaga kung ano yung nandoon nakalagay sa resibo, yun yung value na dapat mag-reflect doon sa company. Company's financial statements. So consistency. Companies should choose the most suitable accounting methods and treatments and consistently apply them in every period. So changes are permitted only when the new method is considered better and can reflect the true and fair view of the financial position of the company. So the thing here about consistency is that the accounting methods and treatments that must be applied shall be in a consistent basis. Hindi lang basta parang gumamit ka na accrual basis, tas next year cash basis naman, no? Hindi pwedeng ganun kasi malilito yung mga users ng data mo ng financial statements. Accruals are matching. So meaning, revenues are recognized when they are earned but not when cash is received. Okay? So, lahat ng financial statements natin, it's always on accrual basis kasi ito yung nire-require sa financial accounting statements according to the according to the Philippine Accounting Standards. Kasi, ganito yan, ano, kapag kunyari, let's say, nakabenta ka ng 2,000 pesos pero on credit siya, accounts receivable lang, it still must be recognized kasi nakabenta ka. The mere fact na nakabenta ka ng 2,000 na worth of goods mo, kahit utang pa lang siya, hindi ka pa nakakapag-earn ng cash, it's still something that you should recognize. And expenses are recognized as they are incurred, but not when cash is paid. So the net income for the period is determined based on deducting expenses incurred from the revenues earned. So examples are expenses incurred but not yet paid in current period should be treated as accrual or accrued expenses under current liabilities. And expenses incurred in the following period but paid for in advance should be treated as prepayment expenses under the current assets, yung mga prepaid expenses. Ano. And depreciation should be charged as part of the cost of a fixed asset consumed during the period of use. So, yun yung mga tinatawag nating recognition principle, ano. Realization, okay. So, in realization, revenue should be recognized when the major economic activities have been completed, and sales are recognized when the goods are sold and delivered to customers or services are rendered. So kapag let's say, naka-earn ka na ng revenue kahit hindi pa in a form of cash, that has already been realized, and when the transaction has already been closed, that should be recorded in our financial statements kahit hindi ka pa nababayaran ng cash, okay? So the realization concept develops rules for the recognition of revenues. A receipt in advance for the supply of goods should be treated as prepaid income under current liabilities. So pag sinabing prepaid income, nabigyan ka na ng income in advance pero hindi mo pa na-perform yung service or yung di mo pa na ibibigay yung goods na nire-require from you. So since revenue is a principal component in the measurement of profit, the timing of its recognition has a direct effect on the profit. So, yung iba kasi dito, extra concepts or lessons. So, I just want you to focus on those following basic accounting principles and concepts kasi they're very important in terms of preparing your financial statements and are in line with your business finance lesson. So, for those people who have listened to this lecture, maraming pong salamat. Thank you.